Good afternoon and welcome to our weekly livestock market update. I'm Brownfield News Anchor reporter Meghan Grebner. With us is University of Missouri's Scott Brown. Scott, it's a holiday and it's a really big day for reports. So let's get right into it and start first with the cattle on feed report. What are some of the things that we saw in the report today, and what do we take from that?
Well, I think when we look at cattle on feed, Megan, a lot of the pre-report estimates seem to be pretty spot on relative to where we ended up. On feed December 1 came in at 98.6 according to USDA, which was actually the pre-report average. When we looked at placed in November, USDA told us we were 15% higher, which was a little higher than the average of the pre-report. We came in at 13.3% higher pre-report. So placements up substantially in November, but also marketing's then up strong as well. USDA pegged those at up 16.6%, which was very near the midpoint of 16.5%. So more cattle placed on feed in November, more cattle marketed, and we actually ended up with on feed inventories at 98.6% of where we were a year ago. So but by and large, feedlots, I will say, continue to be fairly current, but a lot of both marketings and placement activity occurred as we looked in November.
When we look at those numbers, what does that mean necessarily, or does that have any indication or any impact on what happens on the markets and where we see on prices?
Yeah, so I don't think we really see much short-run impact from the cattle on feed report. Again, coming in so close to pre-report expectations, I don't see a lot of big moves coming directly from there. I think we're going to have to continue to watch as we go into 2017 of whether we're holding a lot of calves on wheat pasture that at some point in time enter the feedlot, and by the time we get January, February numbers, we start seeing on feed numbers above a year ago levels. I don't think we've gotten rid of cattle at this point in time, and I think there are some still to come. It's not surprising that we aren't really seeing any kind of buildup in this report, but as you look at increased profitability of feed yards in December, I anticipate they're going to look to fill some bunk space relative to where we've been. So we'll pay attention to see where on feed numbers come when we get the next report. But so far, this one continues to suggest that numbers are going to stay fairly current as we look ahead.
I think the big surprise, at least a little bit, is in the Hogs and Pigs report. Let's start first and talk a little bit about what those numbers, what that report showed and where they sit numbers-wise.
Yeah, I think number one, this is a report that hog producers sure didn't want under the Christmas tree, but they did get today. Across the board, a lot of much bigger numbers than we anticipated pre-report. All hogs and pigs, December 1 at 103.7%. The average pre-report said we'd be up at only 101.7%. So up much stronger on all hogs and pigs. We have more breeding inventory than we thought. Pre-report, we were only up 0.2% on average, according to those guesses, and we ended up being up 1.5%. So more breeding inventory means we got more pigs coming in 2017. Marketing numbers up 4% relative to a year ago. That was relative to a pre-report of up 2%. We saw revisions in pig crop. If you look at the March through May pig crop revision of 750,000 head, that's 2.5% higher than what the USDA had originally projected for pig crop in that March through May period. Now, so we've probably slaughtered at least a good portion of those at this point, but continues to remind us that we're getting these upward revisions. I think if you look back at the previous Hogs and Pigs report, we would have gotten a revision in pig crop of about 550,000 head Dec through February. So this one's even a larger revision so far. So more pigs than we would have thought, just across the board. More pork supplies out of the report that we got today.
Scott, as we take a look at that report, the market had a chance to trade it for at least a few minutes, and it sure took it on the chin today.
Yeah, well, it started out, and frankly, for the week, when you look at Hog Futures, we've been fairly flat. We were trading pretty calmly today until the last 15 minutes, and it looks like we ended up with many contracts down $2 plus as the trade started to look at that report. So it did end up with a pretty sour note in terms of those futures quotes that we had. And again, markets were only open for about 15 minutes of overlap between those report release and the close. So we'll wait and see where markets go once we reopen next week. But all in all, a lot of hogs, to me, suggest we have some problems coming in 2017.
And we'll talk about that in a little bit when we get into the demand side of things. One thing I would like to bring up is corn prices have been down this week. So as we see possible negative indications for at least the hog market, is it a little bit of a relief to see corn prices come down again?
Thank goodness, Megan, we can talk about something on the positive side of that equation. It seems like we've been in this constant discussion of we got a lot of supplies of meat coming, and we either need strong domestic demand or weaker inputs, and feed's really the driver there to help balance what's been very large supply growth that we've seen in livestock markets generally. So it is a little bit of good news. We'll have to wait and see as we get into the year what happens in South America crops. And then, of course, it won't be that much longer before we start talking seriously about prospective plantings reports that we'll get and what that means to feed prices for livestock producers.
Speaking of supplies, to finish out the trifecta of reports from USDA today, cold storage numbers came out. What do we take from what we have there, and how does the market digest it?
Yeah, so I think it's a very interesting set of numbers we got out of reports today, because when I look at cold storage, we're down 13% in frozen poultry supplies relative to a month ago, and still down 4% relative to a year ago. So less poultry supplies to deal with. Red meat supplies in freezers down about 8% relative to the previous month, also down about 4% relative to a year ago. We did see beef slightly up relative to a month ago, slightly down relative to a month ago. But frozen pork supplies were also down about 13% relative to the previous month, and down 7% from a year ago. So we're not seeing this buildup in freezer storage of red meat or poultry in particular. So it tells me that we've moved product fairly well here over the last month or so to consumers, and primarily consumers in this country. So it's maybe the positive piece of news that we got out of the trio of USDA reports that were important to livestock producers today.
Obviously, demand is going to be key for all of the proteins. As we look at the pork side of things, we have those plants coming online in 2017. Do we anticipate, when we see the numbers in the quarterly Hogs and Pigs report, and we look at these revisions, does it maybe get us a little concerned that we're going to open these plants and be able to fill them and have another, maybe not quite as bad, but concern like we did at the end of this year?
Well, I think the number one thing we get out of the report is we will have more hogs to deal with, and more hogs than we thought in 2017 relative to 2016. I think there's been a lot of expectation that packer margins would narrow considerably in 2017 as these plants came on board, and we saw a greater demand for hogs in this country. However, when you look at the numbers we got out of the report, it tells me that maybe processor margins won't narrow as much as we might have hoped originally. And all in all, at the end of the day, we just are going to put a lot more pork on the market in 2017. So I don't know that we run into near the tightness that maybe we have as we've ended 2016, which, by the way, for the week ending December 16th, we set a record again in terms of pork production. So we have been running at record levels, and frankly, I think we can already look ahead into late 2017 and say we're going to have this discussion all over again about pretty large runs of hogs, and we'll set production records again, I have a hunch, as we get in the latter part of 2017. So we're far from done with growing supplies of red meat.
Weekly cutouts, choice beef. Let's talk a little bit about those numbers. Why is that something that we're looking at, and what point of interest does it have?
Yeah, so number one, when we look at that choice beef cutout, we're finally, since July of 2015, above year-ago levels. For me, that starts to remind us that, yes, we've came through some substantial price declines, both livestock prices as well as wholesale prices, but starting to level that back out. So perhaps that downward spiral or descent that we've been on is starting to level out, and we're getting a little better balance going between supply and demand and resulting prices. And that might suggest we don't have a lot further to fall given the situation where we're in today, but getting back into better balance. It always reminds me to say, I don't think we're going to repeat the prices that we had in 2014 anytime soon, but perhaps we don't have to see the same descent in prices that we saw during much of 2016 and 2015.
More talk about demand. I mean, obviously that's something that we need to focus on if we're going to have these massive supplies of cattle or beef and pork as well. The final consumer confidence numbers were released for the year. And let's talk a little bit about the numbers, and then a little bit about how maybe an indication as we head into the new administration. Yeah,
so number one, a little bit of revision ended up giving us a December number that hit a 12-year high in terms of consumer confidence. So it has been a good run in consumer confidence, especially over the last month or so. The data, as you kind of slice and dice it a little bit, reminds us that there are a lot of folks who participated in that survey who think that Trump's policies as he becomes president will be very helpful to the economy. I believe 18% of respondents suggested that President-elect Trump taking office was much of the reason for the strong economic growth that we've seen. That is a record in terms of pointing at one particular event, and I sometimes compare it to back when Ronald Reagan was president-elect. He saw a peak of about 9%. So a lot of things have happened post-election that have been very positive on the consumer side. I just remind us those things need to continue to unfold in 2017. We need strong economic growth in this country. We talk all the time about exports have not been all that strong given how strong the dollar's been for us. So that means we really have to turn to U.S. consumers, and getting strong economic growth in this country has been nothing but positive for us to try to help stem the tide of lower livestock prices.
I would assume it's kind of like in other countries where we see the middle class grow, we see an increase in protein. So a good feeling has folks spending money in different places and a lot of times on our proteins.
Yeah, absolutely. And again, it's just so critical that we continue that. And I will say, if you look into 2017, and we have our own income distribution issues here in this country, and if we get the lower income distribution to grow substantially in 2017, I think that's the one that could be really positive to help buoy prices as we look ahead in 2017 for livestock products in particular.
Scott, we had a viewer question submitted this week. Jessica says that she is a small, diverse meat producer in the Northeast, and she looks at the USDA markets. And this is her speaking, so her question, she says, though it's hard for me to see where I should set my pricing, it is hard to compare my production with the commercial productions. So how can she best use commercial markets to aid in her smaller, diverse farming operation?
Yeah, so it's a very good question. I sometimes will remind us that perhaps the cattle or hog prices that we see in these national level markets aren't representative of smaller markets that we might see regionally across the U.S. The movement in those prices across time, I think, are very important. As we see less strength in hog prices and cattle prices in 2016, I think that has been put pressure on prices for all markets. So even those local markets have seen more pressure of late. And, I guess I would encourage Jessica as she looks ahead that it's not so much the level that she should be paying attention to, but it's the change in those prices at the national level that I think will help her as she thinks about marketing her own product. Now, if we talk about particular niche markets and how those fit, I still think there's correlation that happens between those prices, but one might have to be a little more careful about how much you can read from U.S. prices. But always more information out of these markets, I think helps everyone make better decisions in terms of marketing, even though you might be looking at a very specific regional market relative to the aggregate markets we often talk about today.
If you have a question for Scott, feel free to visit our website or go to our website, brownfieldagnews.com, and you can click the Ask and Submit a Question link, and it'll get to us, and we'll ask it for you next Friday. Scott, we have a short trading week again next week with the Christmas holiday on top of the New Year's holiday. How does that potentially impact how things will trade next week?
Yeah, so I think it'll, number one, be a much slower week potentially next week as we look ahead. Number one, futures markets will be closed on Monday, so we aren't going to get any more information about where markets might move relative to the reports released today until we get to Tuesday. And you're correct, we run into New Year's as we get latter part of next week as well. So I think we won't see a big run in terms of livestock numbers as we finish the year. It will depend on runs as we get early into next week and we get things open again. But we'll see how the market digests the information that we got late today, next Tuesday, and that's really when we'll start to see some movement.
Well, we will probably have a lot to talk about then as well.
Absolutely.
Scott, have a Merry Christmas.
Merry Christmas to you as well, Megan.
If you'd like to have our weekly livestock market update delivered directly to your email box, you can go to brownfieldagnews.com and click subscribe. From Shannon and Scott and myself, have a very Merry Christmas. We will talk to you next Friday. I'm Meghan Grebner on Brownfield.